Welcome to Technical Thursdays. Every single Tuesday and Thursday, we're going to be reviewing technical things in the Forex market, indices market, perhaps any other instrument that we feel worthy of reviewing for you guys, unless you guys comment down below in the chat box below and tell us what you guys want to see on the next episode. With that being said, I have two guest hosts today with me. Judo King, who's my student, which you guys are going to be seeing a lot of contract dropping where I'm teaching him everywhere from A to Z in trading. And then we have Ali, who's actually a master trader himself, who came on today's, you could call it episode or whatever it is, to essentially just review the market with us and give us his own insight on market conditions and the technicalities that he uses to further advance himself as a Forex trader. So the first market we're going to look at today, guys, is my favorite because, I mean, it's the first episode, so I think the first one should be US30. When you think about money, I think about US30. For some reason, it's just the pair that when I started trading at 18 years old, I went into this little list that said indices, and I'm like, what the fuck is indices? Because I was only taught Forex. You know, I came from IML and they only taught you USD, JPY. And they're like, only trade USD, JPY, trade the slow moving pairs because you're a beginner. But I really didn't like the slow moving pairs because I'm not a swing trader. Does that make sense?
Yeah,
like
yeah.
I'd rather be in the market for a couple hours, a couple minutes, and then exit out the market. When I say a couple hours is because sometimes US30 at 9:30 may not move right away. It may move at 10:30, it may move at 1, it may move at 2 p.m. So that's why I say a couple hours. But typically, US30 at 9:30 or 10:30 is already moving, unless it's in an area of consolidation. With that being said, since US30 is not a Forex pair, it's an indice, most people get confused to why you could trade it. And that's what we call contract for difference. So this is like the first technicality that we're actually going to be speaking about, so you guys understand what a contract for difference is. I haven't really reviewed this with Judo King. We are going to be reviewing it in future classes. But currently, do you know what a contract for difference is?
Nah, not really, honestly.
But you trade it every day.
Yeah, I do.
So, have you ever heard, you know how stocks are traded, right?
Yeah.
So let's say I'm trading in Robinhood.
Yeah.
Right? And we're buying Apple. And we're buying Apple at the price of $300. And Apple goes from 300 to 310. How much money did I make on Robinhood?
$10.
$10.
Right.
Because we're buying the share itself. What we're doing here is buying the contract for difference. The difference in the price that it moves to. And essentially what's assembling everything is the contract, right? So when we buy US30, the price of US30 right now is 38,991, right? If we buy US30, for example, at 38,000 and we sell at 38,100 and we're trading at one standard lot size, how much money did we just make? It's pretty easy.
100.
It's 100 points.
Yeah, well, it depends
with
on,
one lot
well, it
size.
depends on the
100.
contract
It's 100,
size.
100 bucks.
It's 1,000.
Right.
So what?
Well, just,
It's 1,000
okay, yeah.
because you look at where the decimal is on the lot size and on the pip/point. Remember how we reviewed this? When you're looking at Forex pairs, you look towards 2 to the right.
To the right.
On pairs like what? New Zealand, JPY. And then other pairs, you look at 4 to the right. With points, you look at 5 to the right or 4 to the right, depending on the price point of that indice. Does that make sense? With US30, you look 5 to the right, right? When you look at it, you have 38989. 1, 2, 3, 4, 5, and then that's where it's at.
Yeah.
Then the other two numbers where it says 95, that makes up the whole point.
Right.
Every
So the
time that
dollar
moves, it makes up a point.
So the dollar is the point.
Yeah,
Yeah.
exactly.
Awesome.
So with getting onto the technicals today, We are on the 1-day chart, and the very first thing that we see from my perspective is the double top on the top here previously during March, April in the middle. And then we see the market drop to create a double bottom, right? And now it's coming right back up to the area where it was previously consolidating at. Consolidating in an consolidating in an upwards direction, because there's different types of consolidation. There's the consolidation where, I'm going to draw it out here. There's the consolidation where the market just moves up and down in the same area. But there's also consolidation where the market moves up and down, but it's moving down. But most people don't understand that. Most people just call that a downtrend, right? When you look at this, let me now press it. When you look at this market right here, and we're gonna draw this. Sorry for that. I just want my little drawing tool. Awesome. When you look at the market from this point to this point, right? What can you say that immediately it is? It looks like an uptrend, but from that point of view, right, there is still consolidation, because from this point right here to this point, there's some type of consolidation, but the consolidation is moving towards the upwards direction. So this is very important. Whenever consolidation moves, look at where it's moving to, because that's typically where the market's gonna break out to. Does that make sense?
Yeah.
When you have consolidation moving at a minimal level, minimal is in the middle, right? It's unknown where the market's going to break out to until the market breaks out from it and then has a retest to then continue the breakout. When consolidation is moving towards the upside, the reason it's moving towards the upside is because there is a battle, right, between buyers and sellers. But if it's already moving towards the upside and sellers are losing more control, buyers are going to identify that sellers are losing that control, because every lower point is getting higher and higher and higher, and buyers are going to assemble themselves to push off the market towards buyers' territory. And buyers' territory is what causes the push in this right here. It causes this push towards the upside. From that push, what do sellers try to do? They try to sell it out again, right? Which ultimately they fail, because buyers now understand what? What does a buyer typically understand here? We had consolidation, right? Sellers failed on selling. Buyers pushed towards the upside. Sellers failed on pushing it down past the consolidation or into the consolidation. They only got it to an area where they are retesting. What are buyers doing at that area?
Getting in at a better price.
Getting in at a better price. Because when we talk about the real estate market, pretend a house down here is $100,000, right? And pretend a house up here where the retest is $200,000. Sorry for the drawing, by the way. But pretend it's $200,000 where the retest is, right? The people who lost out on $100,000, who were buyers, are called late buyers, who are scared of missing out on the opportunity to buy again. And that's why they buy where typically the retest line is. Then from there, the market gets pushed up to the upside again, and then sellers. Again, what just happened there? Because we're in the 1-day chart, so this is a lot of points, by the way. It may look like only a few candlesticks, but that's the whole point of today's class, the technicals in it. We're looking for the small details that most people are just going to be like, oh, it was a double top, a double bottom, and that's it. But they don't understand the logic behind this shit. This is why I never teach trading, because most people don't understand the logic behind it. Does that make sense?
Yeah.
Like the last video I ever shot was, Jesus, I don't know how long ago. This is why I typically just do reels and I don't really get too technical, because it's very easy to understand the market, but it's very easy to get lost in it. It's like a black hole. So what I'm going to do is essentially erase everything real quick and just start off from where we were at. So, and then my drawings look like shit because it's my first time using the iPad and connecting it to the smartboard. But right here we have an area of support. Right here, we have an area of resistance. We are in the housing market. So up here, the housing market is 200K. Down here, the housing market is 100K, right? People who got into the housing market at 100K are called early buyers. They're people who've been waiting for this opportunity, and there are people who have been identifying this opportunity from one single candle. Can you guys identify which candle is that from all of these? And here you go. You guys could draw it out if you guys could identify it.
It would be
Can you guys identify the one candle?
right there.
No.
You wouldn't go with that one?
Huh?
As a buyer, you wouldn't go with that one?
I wouldn't.
Why not?
When you think about major buyers, professional traders, right?
Okay.
Where are they identifying the one candle that is giving them the confirmation to establish buyer's territory? Because sellers failed to sell.
The indecision over here.
You're close to it. It's right in front of your face, but you're close to it.
Judo King, you want to give this a shot?
It's not that one, the one that push, the green one?
Draw it out. Draw it out.
This one right here? Shit, I don't know how to draw it.
Press on it. That one?
Yeah.
It's not that one. I'll
That
show
one
you
you're
which
a
one
late
it
buyer.
is. I'll show you which
I
one
wanna
it
see
is.
your reason.
So, the candle is this candle right here. Jesus, what the fuck?
I think it's easier with the finger.
Yeah, it's this candle right here. This red candle right here. I'll explain why. When you look at the technicals, we understand that in this consolidation right here, this consolidation happened from February 22nd all the way to when it broke out March 20th. So again, it's only a few candles, but these candles make up 20 days, 30 days almost. Where I would establish myself as a buyer is when I see that sellers tried to make a strong push but failed. The strong push is when you continue to draw the technicals, because when we look at this right here, there's some type of resistance here, there's some type of support. From that support, buyers tried to take the market upwards. Then what did sellers have? The strongest push possible. But with that strong push, what was left? A wick. And from that, buyers took control to bring it back here where there's support to ultimately take control right again. And that's where I would establish myself as a buyer. As soon as I see that sellers with all their might failed. Does that make sense? Because if they failed with that huge candle, what in the world will make us think that they will succeed with smaller ones? After, right, buyers establish themselves. That's the major thing. It's after the buyers establish themselves. Because if not, we could have an incident like this where it's a small candle and people may think, well, it's a small candle, I'm just gonna buy. You have to wait to see what the buyers do. Because keep in mind, we're not banks. We're not smart money traders. All this smart money concept is kind of really stupid because you do not know what a bank is doing. What in the world would people be thinking when they look at a chart and look at a candlestick, and because a candlestick has a longer wick than another one, what makes them think that a bank has anything to do with that when they have no type of documentation from a bank? Make sense?
Yeah.
It's like saying someone committed a crime, but you have no evidence to say that they committed a crime. Does that make sense?
Yeah, yeah.
But you saw them commit a crime. And you learned about forensics from someone who doesn't even know what a crime is supposed to look like. So, when we get back into the chart, we see that there is obviously the double top where the buyers took ultimate control, moved the market towards the upside. Sellers then tried to regain control, failed by doing so, and then pushed towards the upside again. When it pushed towards the upside again and then The major technical thing I want you guys to look at here is when I don't want to use the pen anymore. So where's the little line? Fuck.
Which line?
I don't want to use this pen anymore, basically.
Just
Perfect. The major thing I want to look at here with you guys is this right here. I'm going to grab this, delete this, delete this. Check this out. The market from this bottom half, right, moves towards the top, right? And I don't know why I did that. From here, when we draw, we see that the highest point was here. Why isn't it not letting me make a circle?
let me see. Might have the magnet on.
Fuck that magnet. What's the magnet?
When he's drawing the camera.
No, there's no magnet on. Yeah, it's just kind of like how the drawing tool is here.
Damn it. No worries.
Want me to clear it out?
No. You're good. Actually, yeah, let's clear everything out.
And then you'll draw in there, yeah.
Yeah. Because I just want to focus on,
Then I can move the chart if you need.
yeah. No, I can move from here. I just want to focus on those two wicks. Right. So, when we're here, we're going to draw. Now it's not going to show here until I do this. Perfect. No, it's good now.
Awesome.
For today. Okay. So we see that the market broke towards the top, right? Broke towards the bottom, to break towards the top, to break towards the bottom. Where did the market here lose control? What candle?
And that one.
This
that
one?
No, the left. That one.
This one?
Yeah.
Why?
Because there's like people are buying, people are selling over there.
Yeah. Right here, when you basically draw it out, it's the exact same, right? So right here, what were buyers supposed to do? What was the most critical thing a buyer was supposed to do right there?
Sell.
A buyer. Continue to buy.
Oh, continue.
But they failed, right, on continuing to buy right here. And because they failed on continuing to buy, right, the market just reached this area and it established itself as a good area of resistance. So sellers, right, who have been patiently waiting to sell, right, or to start selling, what did they understand? They understand that here, people were going to continue to buy the market because people were scared of being late to it. Here, people had mixed dilemmas about holding the market or selling the market, right? But people who were smart realized that here, people, instead of continuing to buy the market, because we understand that the market down here, right, is at 200K, down here is at 100K, up here the market is at 300K, right? Are you gonna buy a house at its absolute highest?
No.
No, you shouldn't. It's because what happens to everyone that bought Bitcoin at the highest price?
They lost a shit ton of money.
They lost money. You get me? What happens to people who bought Bitcoin at the bottom? They made money.
They made money, yeah.
So people here, right? What are they typically doing? You still have buyers. Who are those buyers? People who don't know shit. You know, people who don't really understand how the game works. But you have more sellers than buyers. But in this candlestick, it's a 50-50 mix. Buyers who have been holding it from 100 and 200 said, I've made enough money. I think it's a perfect time to exit my position. Buyers who have seen the market go from 100K to 200K to 300K, what am I doing waiting? I need to get into this market now. It's going to go up to 500K. Make sense? So they get into it.
Yeah,
and when they get into it, right, they create another thing called a battle. Right? There's a battle between buyers and sellers. And then sellers ultimately take control because now these people who bought it at 200, right, bought it at 250, bought it at 275, are going to start selling off the positions. So when they start selling off their positions, what happens? When someone sells off a position, when someone closes a position in the CFD market, what becomes available to other traders? That same position.
Exactly the opposite side.
In the opposite side or in the same side. Because when I close my position, I'm
Someone
giving
is
you the opportunity to get into it.
Yeah.
Right? So that's where you see the little push here. Right? Do you see that little push?
Yeah.
That's where you see that little push. Right? If this push would have continued, right, the market would have continued going upwards. And people in this area would have continued buying. But the market just went up to wick itself for then sellers, right, the people who sold off at 300 and 200 to start selling the market. And that's what caused the market to come down extremely hard. So when the market came down extremely hard, the very first thing we got to look for is where is there an area of support? Does that make sense?
Yeah.
Yeah.
Wherever there's an area of support, typically the market will do what?
It'll go like a magnet. Just
Stop.
Yeah.
It will typically stop in an area of support.
Yeah.
In this case, the market came down with this candlestick, and then with the following candlestick broke that area of support. When a market breaks an area of support with a strong candlestick, what does that identify?
It's gonna go down.
It's going to go down, but as a buyer or as a seller, it identifies that sellers have
Sellers are in control.
control.
Yeah.
Broke down, right, to retest, to then break down again. The technicals in this is that obviously it's a double top. Very easy to analyze. But what I'm trying to analyze here is where did they have control? Where did exactly they lose the control? And where did the control continue to flow? Does that make sense?
Yeah.
But pretty much. So I look at things like this previously to help me understand things in the future. Because if you do not understand how previous markets work, what makes you think you're going to understand how future charts work? So let's erase all this and come into future markets. Because now we see that the market went down to go up, to go down, to now go up.
Right.
So now what I'm going to have do was, well, basically this was the whole technicals class. But what we're going to do off camera is I want to have Judo King basically come up. And the very same thing we did here with analyzing the seller's position and buyer's position, I want him to analyze it with now seller's position and then ultimately buyer's position. With that being said, I hope out. Fuck. I fucked it up.
It's
We
okay.
have to re-record everything. No, I'm kidding. With that being said, I hope out. No, what the fuck? With that being said, I hope that today's video helped you out in identifying different little technical things that we have found in the market with this double top pattern on US30 on a previous date. With that, comment down below what you guys want to see on Technical Tuesdays or Thursdays, and we will be replying to those comments and as well filming them for you guys. Have a great day.